All right, good morning, everybody. How's everybody doing on this fantastic Tuesday morning? At least I think it's Tuesday. I'm just kidding. How's everybody doing today? Had a little bit of PC issues, but found out it was something very simple. I feel like such an idiot because I literally did everything in the world to try to fix it except one thing. Anyways, everything seems to be working fine now, so we're back on it. We're going to get this thing going here. Good morning, everybody that is here. So, Bitcoin having a little bit of a pullback. We were kind of expecting a pullback. We've been waiting for a pullback. I mean, this thing isn't going to go straight to the freaking moon, guys. It's not how it works. Last week, we did have a red week, but it was a very mild red week. And this week, we got downside continuation. I'm sure everybody is aware that we do have Fed speak tomorrow. We do have the FOMC. And if I am mistaken, I do believe there will be a new dot plot matrix as well. So that'll be good to check out and see what's going on with that. But yeah, I mean, Bitcoin's pulling back. All's good, right? That's typically what we look for. Got a couple supports drawn in here. Got one from the 5th of March right there. You can see that we are currently trading under it. You can see that on the daily. We are at the 50. So I will be watching this same support level to see if we close today's candle above or below it. If I go into the 5-minute time frame, you can see how price has already been playing with it right through this section right in here around 5 o'clock in the morning. Then we dropped back under it. Then we came up and retested again. So as of right now, it's currently acting as resistance, which old support sometimes does, right? But I just want you to see just how flawless. Like, I mean, look at that. That is absolutely awesome to find levels like that you can watch and just set and see what does price do. Are we going to drop lower? Is the market's looking for a deeper correction or not? Well, we're going to find out. All right, so here we are on the SPX. So I drew out the weekly expected range, which is going to be your green is going to be the weekly expected range high. Your red is always the weekly options expected range low, and then the blue line is where we closed on Friday. So currently we are trading above where we closed on Friday. And yesterday's expected move was these two white lines here. And as you can see, we opened well above yesterday's expected move. At one point, we were 50 points above the expected move. So if we go into the SPX here, let me drop into something here real quick. And let's see what we got. So yesterday, we traded right up to daily res and literally bounced off of that. And today you got downside continuation, almost testing yesterday's open. This is old resistance. It's not perfectly situated on it. I don't actually know what that green line is or what it's for even. So that's funny, but we can get rid of it. Let's put a real line up there so we nope. Right there. But that green line was absolutely perfectly tested with this swing low right here. So this is old resistance on the S&Ps. Small little pullback we had last week. Yesterday we opened up higher. That would have been a perfect opportunity to look for a short for a day trade. Obviously, you would have taken profits on that trade this morning as you were testing old resistance turned to support. Even though Friday did close below it, you will sometimes still get retests of resistance. All right, so that's good. That's what we look for. I'm not really thinking that the market's going to roll over or anything like that. But I mean, this thing has been nonstop, just straight to the moon. I mean, we're on, I don't even know what week now. We were on like week 19 and we only had 2 red weeks. So if we scroll over where are we at, we're at week 20. And there's, I mean, can you call those red weeks? Yeah. I mean, they did close red. But what does it look like on the S&Ps? So you had 3 red weeks I mean, when these 2 weeks were just essentially dojis, right? Not a lot of pullback going on in the risk markets. The risk markets are just insane right now. Insane. Just straight moving up. All right, but we are pulling back. So, yeah, I mean, if you're going to be looking for shorts, just be careful. Just realize where you are inside of the weekly expected ranges, as you don't want to be looking for shorts down here, right? But if we do go up here and reject, then we could potentially be looking for this to pull back, because if we go into the Fed watch tool real quick, you're going to see that even though they were expecting a rate cut in March or May, they bumped it out to June. Oh, excuse me. And now that June rate hike or rate cut is even been dropped down to like almost around 50%. What happened? Oh, there it is. All right, so there's a 99.0 chance that they're going to do anything tomorrow, which, we already knew that. But if you go to June, which is the expected time for when they're going to cut, you can see there's only a 55% chance of that even happening. So, I mean, this was like 60 at one point, but it's dropping. So I would say that's probably because of the hotter than we expected CPI print. So with that being said, we're going to look around for something to trade today. All right, Aussie dollars pulling back pretty heftily. This is because gold has been pulling back. Gold is testing the old all-time high right now, and although it did break support with Friday's close, we have to wait to see if it ultimately holds here or if it closes higher than this line. This is your old all-time high. So it's not necessarily a support or resistance area, but the market, it is an area because it's the old all-time high. So it does look like people are trying to come in and bid this thing up, and it's a perfect example of a bull flag. We just need to see if it ends up holding or not. All right. So with that being said, things have been a little bit difficult for the small count. Been taking a lot of losses, not really any winners. I did nail one good winner on a gold play while everybody was trying to short gold. I was setting it along and I loved it. But this pulling back here at the all-time high, this to me looks good, and it still looks very constructive. You got massively overbought on the daily. Let's see if we got overbought on the weekly. Yeah, we just barely tagged overbought on the weekly, and we're pulling back. I love last week's look. I love this week's look. It doesn't look like it's looking for downside continuation. It looks like it's just simply retesting the old all-time high. It looks like it's just a pullback, and we may be looking for bullish continuation off of gold. And if that's the case, then the gold miner that I still hold hopefully will end up going, to the moon with gold. As it is broken out, it has closed the weekly above the breakout, solidifying the breakout. Now all we need is to see bullish continuation for the breakout. Only time will tell, ladies and gentlemen. Only time will tell. All right, so let's go check on some Euro USD. We were looking for Euro USD to actually hold here. Actually thought that the dollar was going to reverse, but it is trying to break out of this descending trend line here. You did get back above the 2023 yearly opening range, and you are testing old supply right now. So today's close is going to be extremely huge. You can see today's candle is a pretty big candle. This is because people were shorting based on the trend line there. So this looks like a short squeeze to me. So what I really want to see is I want to see this thing close in that area and then potentially roll back over and head back to the downside, making this a bull trap. All right, that's what we want to see if we're going to see continued upside on risk markets. We definitely want to see the dollar heading lower. The main reason why is simple. If you think about it, if the price of the dollar is actually going up, that inherently is going to bring the price of stocks down. All right. And it's not because stocks trade inverse to the dollar or any of that. It's because the dollar's literally getting more expensive. So the price of assets will lower because of that. All right. So if we're going to see continued bullishness on the stock market, we definitely want to see this to be a bull trap. And it's a short squeeze, so it is a big candle. So we can't really treat it as a bull trap right now. We have to look at it as a potential breakout back to the upside, which could, which could mean that we will be looking for puts on some stocks, not all. The Apple long that I was telling you guys about is kind of working out. Yesterday would have been a good time to take profits, especially around the high of day if you didn't. But I still like it. The problem is it's in a downtrend, right? And anytime you're in a downtrend, any spike in price can be sold into. So we got to be very, very careful about that. So it's had plenty of time here to get some bullish momentum like this over here. And it's just not being able to do that. As you can see, the first day that it broke out was Friday 2 weeks ago. And then last week, all you did was basically hold this area as support. And then we opened up higher yesterday, but ultimately sold off. So that's not really what I want to see. What I was expecting a bullish move up to at least 179.66, as that's the old resistance. And then we would reevaluate Apple. Because basically, if you look at Apple in a longer term, like if you pull up like a 4-year chart here, you can see that you do have an inverse, or not an inverse, but a cup and handle formation, being this bottoming formation here, and then this bottoming formation here. So that is a cup and handle formation on the longer term. And what I was expecting or wanting to see is that Apple would go back into the range, as you have set a range marked by this white line at 198.23, and the lower edge of the range being at 166.83. So if this is going to be the range, I was wanting to see a bounce at least back up to this resistance level here and possibly test the yearly opening range, as Apple is down on the year right now. So even though you got stocks like Nvidia and other things trading at all-time highs, Apple not doing so good. Apple struggling a little bit. Microsoft made a fresh all-time high, then pulled back. However, we do not have a bull trap just yet, confirmed at least. But if you are looking to buy puts because you do think the market is going to pull back for a while, then 420.55 is a good price to look for the puts. All right. Wait, what did I just do? Okay. Let me pull up MSFT real quick over here on the options chain. All right, so basically what we'd be looking for is we definitely want to go out at least 30 days. And of course, this platform is going to be stupid this morning. Come on. All right, so I don't know what's up with that. Oh, there we go. Get some prices going here. Give me some prices going here. Now, remember, when we're setting up a trade, we always want to see the implied volatility going down if we're going to do a spread. And Microsoft is a little bit expensive. I don't know why it only loaded some of the stuff here. but it is in fact going higher, which is good. Sorry, I meant we want to see the implied volatility going higher as we go out. So it is set more to be like more of a little bit better. This isn't the accurate price for some reason. It's not giving me the implied volatility. But we can infer that the implied volatility is going to be higher than 43, but less than 89, 18.43, 18.89. So maybe roughly around 18.60, maybe. But you can see it still makes it a little bit expensive. I don't like to trade $5 wide spreads. 420, 415, that makes it a $5 wide spread for less than $1.50 because it leaves too much profit potential on the table. But you know what? The max profit potential would be 275. That's still a pretty damn good trade if it were to play out. But you could set something like this up if you wanted to. Maybe your broker platform is working, as mine is not. Let me just pull up Thinkorswim. Well, I can't do Thinkorswim because it won't give me the accurate pricing either. What's going on with this thing? It's very slow this morning. But I mean, basically all I'm saying is if you were expecting this to fail, then Microsoft is a good place to look. Anything that's usually strong like this, and to be honest, this is a breakout. This was your high day close forever, like your all-time high day close until this day was put in. So this is a good resistance area. But if you close a daily above 420.55, I would not be looking for a short because it is inherently strong. And anytime something is strong, even when you're getting a market correction, that's typically not the stock you want to short, right? You don't want to short highs because you don't know if it's going to be the top or not. And to me, this just looks like bullish consolidation more than it does a pullback. But if we are going to see a pullback in the markets, remember tomorrow FOMC at 2 o'clock, and then you're going to have the Fed speaking in the meeting at 2:30. If the markets are going to pull back, which Bitcoin appears to be signaling that is going to be the case. Remember, Bitcoin has led the market. All right? Bitcoin has led the marketplace in the rally, which is why we've been extremely bullish on stocks. As long as Bitcoin is rallying nice and strong, we don't want to be bearish. But now that Bitcoin is pulling back a little bit, that gives us a potential chance to look for downside trades on the S&Ps. Now, you can trade micro contracts if you want, but I don't like doing that on an already down day. As you can see, we are already down 13 points on the day. Now, today is more than likely going to be a very small range day based on the fact that the FOMC is tomorrow, and usually the day before FOMC or the day before a huge news event, you don't really get a whole lot of volatility or market movement. But Bitcoin's down 7-something%. So you could potentially sell a call. Let me see here, / let's pull up the micros because this is a tiny account and it is smaller because it's in the red again. We could go out, a long ways out, like 90-something days, right? If you want it to move slowly, go out like 90-something days and sell a call somewhere up in this region, 54.75. You could play it a little bit more ballsy if you want, but the closer you go to at the money, the faster the option is going to move with little fluctuations in price. So I like to go out, get under a 20 delta, 19, 17. The best way to do it would be to buy or, to sell somewhere in the 9 area. But you can see there's just not a whole lot of premium there. $65. I mean, $65 is $65, but you got to wait 93 days for that to happen, or you need an automatic down move, a huge down move, and then you could collect, 50% of that $60, which would just be 30. So I like to go a little bit closer in this circumstance. Let's see, what would this be? All right, that looks a little bit better. Maybe even go down 180. Let's go to 210. So I'm going to go ahead and throw this order in there, 54.25. Get filled on this. This is a short call, 54.25, and all I'm looking for is a pullback to continue on the S&Ps based on Bitcoin's price action, right? Because Bitcoin is one of the most risky assets on the planet. So it generally leads sentiment. So if we're going, basically what I'm trying to say is if Bitcoin is going to have this pullback, then we want to sell a call on the S&P 500, because that could potentially make us a little bit of money if we do in fact get that pullback. And by going way out of the money like this, and by going way out in time like this, we don't have to sweat it, right? Because the longer it goes by, the more days that go by, and you're not trading at this price, 54.25, then you will make money. And then if you get a really good down day, you'll get to the point to where like you can pretty much close the trade out. So we'll see if that happens or not. But also we'll see if we get filled. There is not much open interest or volume on this strike for some reason. So let's go ahead and change it and move back out of the money one spot, because it does appear that there is a lot more open interest up here at the 54.50s. Now it will cut the max profit by a little bit, but it's not too much. All right, so there we go. We got that working. Perfect. So we'll see if that ends up happening. Like I said, if we get a big move up tomorrow, it'll put the P&L in the red. But then later on, if we do ultimately get that pullback down to like $5,000, then that, if I get filled on that strike, it'll make money. Or you can just simply buy a put. So you can literally sell premium out here, right, on the call side, and then go closer, like, I don't know, 42 days, and buy a put out of the money with the premium that you make. You could do it that way. But that would be as short as you can get. You're literally short by selling the call and short by buying the put. So you're as short can get. And I don't like to do that typically, because if you're wrong, you're going to lose not only on the long call or the short call, but you're also going to lose on the long put. And you know that wouldn't be good. So you can either just sell a put just buy a put or sell a call. I'll let you make the decision on what you want to do. But if you want to follow that trade, it's 93 days out on the micro ES contracts, the futures contracts, and it's the 54.50s. Now, if we go look at the ES minis, well, I don't really need here. Let's go look at it on this instead. Where's it at? There it is. We want the ES contract. There you are. All right, so this is delayed, but it doesn't matter, because all we're looking for is 54.50. And that would be roughly this area here, right? Oh. So there you are, 54.50. As long as price stays under this, that call will make money in the long term. If price moves higher, then that call will lose money. It's not very far for that much distance. The reason I go out in time like that isn't necessarily because I'm waiting 93 days to get rid of the position. No. If we have a severely huge down move, like say in the next 2 or 3 days, say we come down to like almost $5,000, that call is going to be up probably by 50%, which means I can go ahead and close the position out. You see what I mean? Just getting defensive because of what Bitcoin is doing is essentially all I'm doing there. All right, so here we are, some positions or trades that we are looking at. This right here is going to be a trade based on oil. This is a gold trade. You can see that it has pulled back. It has pulled back a lot, actually. And to be honest with you, if we close under 2045 today, I'm going to close that position out. It will be a win, but it'll be a small win. Why am I not getting filled? There we go. All right, so I'm in that. I got that fill off on that call, that short call, and I'll keep an eye on it. You know what I mean? If you do take that trade and it gets to be within 1% of a loss of your total account equity, then you close the position. All right, you don't wait and say, well, maybe it'll come back. We don't play that game here. We trade the right way. If our stop loss gets hit, which is 1% of total account equity, we bounce because we know eventually we're gonna nail a good one. All right, so not a lot of questions this morning. What's happening, everybody? Nobody's got questions. Awesome. Good morning, everybody. All right, so Meta's another one that's been basically range bound at, highs. I mean, this thing just flew, didn't it? Took off, went to the moon, made fresh all-time highs, and it just looks range bound. It just looks like a pullback. And to be honest with you, that's pretty much what Bitcoin looks like too. But you can see that this thing has lost a little bit of momentum, but the bears are struggling to get it lower. So there's still a lot of demand for this asset. But these are the assets that I would want to be, watching for potential shorts. You can see support has been tested perfectly there and perfectly there as well, and struggling to close under it. Remember, we're not shorting this because we're trying to pick a top. We're only looking for potential downside trades because Bitcoin is signaling potentially that we could see a greater pullback on the overall marketplace. I'm going to go ahead and pull up Thinkorswim. Just bear with me for a second because Thinkorswim has a lot more data than Tasty. And I need to see some data real quick. Anyways, McDonald's short. I mean, ultimately it worked out beautifully, but not for me. I took it too early and ended up getting stopped out. But if anybody did take that short, good for you. I mean, you should be sitting pretty right about now. PayPal, we were looking to see if it was going to roll over. Ultimately, it did not. So we have to give this thing a little bit more time. Yeah, I mean, if it's going to roll over, it's going to do it soon. However, the moving average structure is starting to turn around, so this thing could just break out. Oh my God, why did they start doing that? Ugh. All right, let's see what happens here. Yeah, PayPal doesn't look like it's going to be a trade. Tesla, let's go look at Tesla. Yeah, Tesla traded almost down to this descending trend line here, and it did get a little bit of a bounce. So, I mean, it don't look good, right? I mean, Tesla looks almost bearish. I mean, it ain't no almost about it. You do have bullish divergence, but on the daily, let's see if we got it on the weekly. We do not have divergence on the weekly, so I don't like playing divergences unless it's on the weekly myself. Not doing so good. Yeah. I wouldn't look to short it down here, but at the same time, I would like to see it pull back to an area where we could look for shorts, or this thing could set in and start to build a long-term range. As you got this swing low down here, it's going to be a very important swing low moving forward. We don't want to see it break down below it. So it could set in a range, and that could make for some trading opportunities if it were to do so. But usually when something looks like this, I generally would be more prone to looking for shorts than longs. However, if you think it's going to bounce, then, it's down on the year quite badly. You're down 31% on the year. So Tesla not doing so hot. All right, I got this pulled up, but I didn't see here I forgot what I was wanting to look at. Yeah, so today's probably going to be more or less sideways. Because Nvidia is more or less sideways still. Yeah, I mean, this looks like it's accumulating the gains. If we could break and close below 857.74 and get bearish momentum, then we could at least look back all the way down to 787. That's almost $100 move, ladies and gentlemen. So if you are going to play Nvidia, please do it with spread so you can maintain your risk. And then oil is doing what? Oil has broken out. So this is going to affect the bottom line on CPI, or your main number, if you will, the one that does include energy and food, which is just your headline CPI number. As long as oil's going up, that's going to cause CPI to go up, which could indicate that we will not get a cut in June either. And if we do not get that cut in June, then the market could really, really take that as not really a good sign. That's why I'm looking to sell calls right now. Also, the skew's still screwed up. And as long as the skew is high, which it is coming down, you really need to look at this on a line chart. Let's get rid of the moving averages because they don't count on this. It is starting to come down there, but I mean, as long as it's above 130, it's high. But when the skew is high like this, then that means there's more premium on the call side to sell. So I'm going to be looking to sell premium for a while. We just need the market to actually do a correction or have a correction. And in order for that to happen, we got to have tech. It's got to step off a little bit. As long as tech is just, mooning, then it's not going to help the market at all to pull back. And I mean, there isn't really the only sign out there right now that we're even going to see a market correction is Bitcoin. It's literally the only one. Like if we pull up this, for instance, this is going to be bonds with the XLK, which is tech, because generally speaking, whenever people are, concerned, they'll leave tech and go to bonds. And then whenever that's like a huge risk on in the marketplace, then they'll buy tech and run out of bonds. So basically what we need to see is this tick up, right? If this indicator, which is TBT/XLK, if this starts to move higher, then we're going to see a market correction. All right. We can overlay it with SPX, and you can kind of see what I'm talking about. So as it's going down, this will go up, and then you got that spike there for the pandemic. But ultimately, even though it did get a bounce here, you can see that the market did indeed still continue higher. But when we got this aggressive push higher here, that's when the bear market happened. And even this correction right in here, this little bit right in there, is this correction here. So we want to see this thing get up and start moving to the upside. And then that would indicate we could see a pullback on stocks, right? But this does look like it's basing out. So we have to keep this on watch. All right. We got to keep it on watch for any bearish trades. All right. And there's a bunch of them here, but we're not going to go into all of them. Basically, Bitcoin's already telling us what we could potentially be looking for. And it does seem to be pulling back a little bit. This is good. I mean, a pullback before the halving is very healthy and constructive in my opinion. So, yeah. Now, tomorrow, I don't know if I'll be able to go live or not for the actual meeting. As long as internet's going good, I'll give it a shot. But if the internet starts wigging out on me, I'll have to close the stream down. But if as long as the internet's working, we will be going live, because my computer issue wasn't really an issue at all. It was just me being stupid. Mara, yeah, I wouldn't even worry about buying this. This is going to make it more difficult, especially the halving for these, because obviously when you have the halving, it makes the hash rate much more difficult for miners to make money, right? So that's why you can see Mara pulling back. I'm assuming Riot is probably pulling back as well. Yeah, Riot's pulling back quite hard, actually. Riot's down over $8. And it's only a $10 stock, so that's not really good. Whereas MicroStrategy's doing pretty much better than that. Yeah, it's almost down 50%. We can go look at MicroStrategy real quick. Starting to have that pullback there as well. But ultimately, MicroStrategy made all-time highs. Nope, it didn't. Almost, but not quite. But this is a very expensive stock. It's trading at $1,200. And this thing moves very fast, so be careful with that. Even Coinbase is pulling back a little bit, but it's nice to see that Coinbase broke back above that $200 area. Not saying the bull market is over. I'm just saying we are looking for a pullback. It has been really hot for a really long time without a significant pullback. I mean, we don't need to see a significant pullback, but at least a few weeks of sideways to down. If we get a big boombastic downside candle, then that would be a little bit alarming, but we'll see what happens. I mean, hell, you've already made fresh all-time highs on Bitcoin. I did not see that coming, not before the halving, but I would just chalk that up to basically people FOMO buying based on the ETFs. They're FOMO buying into the ETFs, and they're buying based on the halving. The halving is getting closer and closer every single week. I mean, it's almost here. And remember, it doesn't just moonshot straight after the halving. That's not what it does. And I'll show you that real quick. Crack on to the weekly here. So there was this one period here where you did have a pretty drastic pullback. Then you had your halving, and then you did ultimately pull back a little bit more. So, I mean, this could absolutely happen. And then get them shot. But we don't even know if we're going to get a moonshot, to be honest with you. I mean, technically, we have already gotten the moonshot. You've already made fresh all-time highs, but I don't think it's over. But we'll have to see. I mean, with the ETFs and everything, it could really affect the way Bitcoin moves from now on. Instead of it just operating like it used to operate with the 4-year cycle model, it might not. It should, based on the halving, but we'll see, right? All of these ETFs will have an effect on Bitcoin, because when people are buying ETFs, they got to go out and buy Bitcoin. The ETF does. And that was the whole point of having a spot Bitcoin ETF. It did help gold, obviously, but we don't know if it's going to help this. We just don't know yet. There's just too much macro stuff out there to be concerned with, as far as, not residential real estate, but business real estate, business offices, commercial real estate. That stuff is kind of worrisome right now, and the fact that the oil prices could affect the CPI is also a little bit alarming. So we have to keep oil on watch. As long as it's breaking out and moving higher, we have to be very much alert for a possibility of potential downside. And I just moved that line, and I totally did not mean to. All right, there we go. The oil's hitting overbought there on the spot. Let's see if we're hitting let's see if we're hitting the overbought signal over here on this one. Pretty close. But we were watching it for a breakout, and it did break out. This was the breakout that we were watching for. Ultimately, we did get the breakout here, but we did not get follow through. I mean, it took almost 2 weeks before it actually ultimately started to push. But we were watching this, and we were expecting a breakout. So I guess maybe that could be affecting the Dixie as well. That's interesting. We're testing December's CPI. All right, that's interesting. All right, so yeah, we'll. I still have a bearish bias on the dollar. Let me get back over to the main chart here. I still have a bearish bias on the dollar. based on the moving average structure. You can see the 200 is above the blue line, which is the 100. The 100 is above the 50, and the 21 is below the 50. So this is a bearish structure, and this could just be a bear or a bull trap. So we are keeping this on watch. If this starts to roll back over, then I would expect Bitcoin to potentially find a bottom, as well as stocks, and then this start climbing again. All right. IWM and Baba. Yeah, let's go look at IWM. IWM has been pulling back. It's actually pulled back nicely. I thought once it broke out, it would be able to maintain the breakout and continue higher, but ultimately it did not. I mean, it did. It traded all the way up to 210, but ever since it's just been rolling over and it dropped back into the breakout range. Now you're retesting the yearly open. So, I mean, if we lose the yearly open on the IWM, that's going to be a little bit concerning as well. Let me pull up and see what we look like on the index watch. S&P 100. Right now, it's more bullish than bearish, as we have 65 Ps, and there are more bullish stocks than bearish stocks. What is that? AMD. AMD coming down hard, huh? I didn't even look at it. And then Baba, let's go look at Baba. Yeah, Baba's struggling. Like I said, I would probably trade the China ETF instead of Baba. They trade very similar. Very similar. If they're going to stimulate China's economy, then, we were looking for China, for it to actually bounce. But it did not. I mean, it did for a little bit. Where is it at? There it is. All right. Yeah, you can see they're very similar in nature. This actually looks like it's still trending higher. Right? I mean, if you look at it on the line chart, once again, you can see it a little bit better as far as the trend. You can see that it is trending higher. I mean, it's making higher highs and higher lows. So I would like to watch it and see if it's able to hold these higher highs and higher lows. It's a pretty steep trend line. So like I would rather trade this than Baba. Like right now would be a good time to get long on this if you think it's going higher. Right? So we could potentially go and buy FXI calls, and they're cheap enough. Let's say 38 days out by the 2350 strike, if we are expecting another leg higher. It's losing bullish momentum. Man, I'm going to tell you right now, the tastytrade is so freaking slow. I can pull up FXI on Thinkorswim, and the options prices pop right up. 38 days out, boom, there they are. Oh, and in the money, 23.50 is going to be $112. I mean, that's easy enough to manage, right? Or you could buy like a $2 wide spread on it. Let's see what that would look like. It would be 78 cents, max profit 122. Or you can just buy the call itself. Just buy the call itself. $110, and just keep an eye on it. That is if we're going to bounce here. We don't know that we will, but this will be the third test of the trend line. So if it breaks down, that could be a bear trap for 1 or 2 days, but ultimately we'll see how it plays out. But it has been bouncing. But BABA, not so much. Like I said, if I was going to trade BABA, I would just trade FXI instead. So yeah, you do still have a small trend working its way up, but it's not as profound as FXI's. Like, actually, this looks more like a range than a trend. Yeah, this looks like more of a range than a trend. So this is going to be your support level to watch on BABA, $72. This was the support, but it broke down. And this candle right here broke down below it as well. So 74.03 is your current resistance. You can see test, and then it's down lower. But if FXI catches a bid, then this could too. I would just rather trade FXI. Where do you see Bitcoin bottoming before the turnaround? It's impossible for me to say. I mean, I can give you my opinion. You know what I mean? But my opinion is useless. Right? We don't know what price is going to do ever. Nobody does. Nobody does. But you can see that I have these daily support. Well, we just got filled on the FXI trade. You can see that I have daily support levels. These are the areas of which I would expect it to turn around. But I mean, it just depends on what the Fed says tomorrow. Is the Fed dovish? Is he hawkish? You know what I mean? That's going to affect prices a lot. The fact that Bitcoin's finally pulling back and pulling back with a little bit of steam, I think we're going to be looking for stocks to do a similar thing, right? I mean, just look at how vicious that rally's been. Look at that. Here's the 2023 yearly open, straight up all year long, pretty much. I mean, you had one brief stint from April to October, a few months where you traded basically sideways, but then you broke out again. This is an uptrend, and we expect that to continue until it doesn't. So, I mean, when will I would expect it to, I don't think it would go lower than $50,000. Right? But that's not, I can't give you what you want. I wish I could. I wish I could tell you exactly the price at which Bitcoin was going to stop going higher or lower, so that way you could buy it. That's just not the way investing or trading works. I know one thing. I don't like being a buyer up here. I mean, you made all-time highs before the halving. That's never happened before in Bitcoin's entire history. Ever. So, I mean, yeah, you got a weekly support down here. I would not want to see this get taken out. If it does, then the next area to look would be all the way down there to 42 grand. And that's going to be your yearly opening range. If Bitcoin is going to continue to do what it usually does, and that is go higher after the halving, I do not want to see it get under the yearly opening range. If we get under the yearly opening range, that could be a disaster for Bitcoin. A disaster. Because whenever something is bearish on the year, you can see that, like, by looking at Apple or look at Tesla. You know, once something breaks below its yearly opening range, it's usually done for that year. I mean, these things are struggling to get any kind of bullish momentum going. Here's your yearly open on Apple. You're bearish on the year. I mean, yeah, you're bouncing, but that's just because you're in a longer term range. But yearly, you're bearish. And then Tesla. I mean, this thing, it's getting absolutely creamed. It's down 38%. So I mean, we don't want to see it get below its yearly opening range. Now it could be that Tesla's just setting a yearly low and it goes back up, but where that's going to ultimately happen, nobody knows. Nobody knows. We got levels to watch, and that's all we can do. Here's an old weekly support that was broken by this candle here. So it matters now what this weekly does. Does this weekly close under it? If so, we can look for it to continue lower, because this is your lowest support on the weekly and it's already been closed under. I mean, that's a close under. So it doesn't look great. And we don't want Bitcoin to look like that. It could be disastrous. As long as it's above that, I like it. I like it higher. But it's down 7% today. So it's cooking with grease to the downside right before the Fed. You know what I mean? But it's okay, because this was a pretty vicious down day too, wasn't it? And then you got a little bit of continuation. So, yeah. Maybe it takes out this low and turns around. Who knows? The prices to watch is going to be this line, which is 63,800, then 61,179, ultimately 57.47. Those are the prices to look for a turnaround. You don't buy the first tag, obviously, because this can happen. You can fall right through it. It's the close that matters. Does it close back above, or does it close under it? If it closes under it, then we look for the next lower support. Pepsi. Yeah, Pepsi didn't do good. It did break out of its range to the downside. But, it's right back up. Wow. So this looks like could have been a bear trap there, huh? I did not see that coming. All right, so you got another resistance there at 175.27. I wouldn't buy it because you're into resistance, old resistance. One could arguably put a line here. This would be resistance as well, but since you broke, down, you always revert back to the last resistance. So I couldn't buy it. But yesterday it had a hell of a day. There must have been news on Pepsi yesterday. Must have been news. Because look at all these candles. I mean, none of them are like this. Maybe this one. That's a pretty big daily range there. So it needs to get above this stuff, and then you need to wait for a pullback into support. all in all, it doesn't look bad. It doesn't look terrible. It's just been trading in a range for a long time. It ultimately did break the range, but now it's back up. This looks like a short squeeze to me. It looks like people got caught off sides trying to short right there at weekly support. Right? A lot of shorts built up right there, and then boom. So that's probably why you got such an outsized move yesterday. But ultimately, I mean, Pepsi's a good company. It's not going away, right? And they do make money. So, I mean, it's a long-term hold for me, but I can't trade it right now. It's just, it's at resistance. There's no way in hell I'd try to short it. But the structure is bearish on the daily. On the weekly, not so much. I mean, that's your reason right there for the bounce. You got the 200 simple and the 200 EMAs, both right there. That is typically when investors get long, right? On a test of the 200 weekly, phew. Yeah, I would have, I should have been paying more attention to this. That would have been a long all day for me. I mean, that's an absolute beautiful freaking trade. Oh, yeah. I wouldn't buy it now. Obviously, you missed out on this move here. I would wait for it to find support. Maybe it finds support around 169. 60. So resistance holds. You want to watch 169.60. See if this level holds. If this level holds, then I could potentially look to get long. Even though the daily structure is bearish as far as moving averages go, the weekly is not. The weekly is still bullish. Your 50's above your 100, your 100's above your 200. I don't really pay attention to the weekly 21 except for trades, right? So ultimately when you first break and close, that's the time to start to be like, well, it could be rolling over here. And then ultimately it did break down and close there, and then you can see it just fell and then struggled to get back above it. Boom. But the 200 is like, that's a mega buy for most everybody that's investing. Like, they literally got their algos set to buy on a 200 EMA or simple moving average test. eBay could be a sell right here. I mean, look how it closed. It closed right at the 200 simple. Stocks are more prone to treat moving averages better than like FX or, cryptos do. So many algos. This is bearish. Ooh. Intel doesn't look good on the weekly, does it? I mean, it could find support, though. This is the 200, so Intel could potentially be a long. But the fact that the 200 simple was a sell, I don't know. Yeah, Intel could be a buy here. Can we build let's see if we can. if we can build a spread. We cannot. I love the skew when it's high for selling options, but it makes it a pain in the ass for long calls. But I think this one moves slow enough at $1.88 for the 41.50 strike. But at the same time, if we're expecting a pullback on tech, I don't know if I would buy it. But it is setting right on the 200 exponential. This literally could be like an ultimate buy. But it is also bearish on the year. So that really hurts it. Michelle was looking at ENPH. Yeah, this thing is bearish on the daily and the weekly. Yep. It's bearish on the daily and the weekly. I would be expecting this thing to retest support down here at $97. It would be hard to take a swing at it here, but if it retests and fails up around 118, I could definitely buy puts on this. You're welcome, Susan. I bought it at 164 for a long-term hold. Yeah, you're doing fine, bro. Don't worry about it. Like I said, it retested the 200 exponential and simple moving averages, and so many people stepped up. So many. Because it exploded away from that. That's an explosion. That means a ton of buying just stepped right up and scooped up Pepsi. I mean, look at that yesterday candle. That's just insane. Like they bought it at 161. You're holding it at 164. You're in good shape. But you are at resistance, and I could expect a pullback. But ultimately, I mean, I think longer term you're going to be okay. As Pepsi could be looked at as it's a consumer staple, I think. But you know, I think it's okay. But this is a defensive. Yeah, the defensive stocks are already mooning. It just doesn't. This market is very difficult to interpret right now. Very difficult. Simply because, like, your defensive stocks and your defensive sectors are moving to the hot or moving higher, and so is your tech. But your tech sector is definitely overblown. Financial sector, look at that. This thing is damn near making all-time highs. The financials, right? Like, everybody's worried about commercial real estate. Meanwhile, the financial sector is literally about to make fresh all-time highs. Now, that's because it's got JP Morgan inside of it, and JP Morgan looks just like this. But yeah, your healthcare sector, mooning. I mean, these are generally, you expect capital rotations to flow out of XLK into XLV, into XLI, but like they're all mooning at the same time. It's like, it's a very weird, very, very weird time to be trading. I mean, your freaking bonds are getting absolutely wrecked. It's like, when are you going to give them a break, man? I mean, this is what most firefighters and policemen and teachers and all your 401ks, most of them are in bonds. Like, my stepfather's like pukes every time he looks at his 401k because he didn't want risk in the portfolio, right? No risk, just straight up safety. So that's bonds. So his portfolio is obviously crushed the last 3 years. And it really sucks for him. You know what I'm saying? I would love to see the bonds get their bullish groove back, but I guess it's not going to happen until the Fed starts cutting rates. And with oil starting to spike up here, I mean, Joe Biden. I mean, a lot of people think the country's doing good, but ask anybody that's got a safe portfolio in their 401k, and they'll tell you it ain't so good. Can I look at LTC and an XRP? Yeah, sure. I mean, it's doing okay. But ultimately, if Bitcoin pulls back, this could too. Just, be aware of that. Bitcoin is the tide. XRP, Litecoin, Ethereum, those are all boats. So Bitcoin is the tide and all the other alts are boats. If Bitcoin is going down, the boats are going to go with it. But I'm not saying Bitcoin is going to go down. I'm just saying it is pulling back. This is probably going to be a sell, more than likely. I definitely would not be looking to buy LTCN up here. And then XRP for the XRP army. Ouch. XRP's getting hurt pretty bad. XRP's struggling, man. It's struggling to get any kind of bullish momentum. Every time it gets bullish momentum, it gets hit right back down. Longer term, this thing is moving upward. I mean, it is making higher lows. But it is definitely struggling around that 75-cent region. And you're right back down in the 50s. Weekly, it looks okay. It looks okay on the weekly. Yeah, XRP, it looks okay on the weekly, but you got to wait for this candle to finish for it to find or make support. The daily looks terrible, but we do have some daily supports you can watch. First area of support that I would watch would be 59,219. As soon as you get a daily close under that, then you're going to have to go lower. All the way down to 54. That would be the next area of potential support. Bitcoin's down 7% today, so I mean, that's affecting a lot of your other altcoins. I mean, XRP, Litecoin, and Ethereum would be more main. They are alts, but not like there's so many alts out there now. It's like they're the OG alts. That's the category I'd put them in, right? The OG alts. Let's see if it can hold support here. I don't know if I'd be a buyer just yet on it, but I mean at 55 cents. I mean, come on, right? You could throw a couple $100 at it and just, as long as you don't have leverage on it, you never know, right? You never know. These things, we've seen it happen a million times where some alt just for some reason runs up 2,000 or 3,000%. $2,000 or 3,000% move with a couple $100 would turn a couple $100 into a couple thousand. more than a couple thousand. I mean, but if you're trading it, like constantly trading it and using leverage, right now is not the time to buy it. I wouldn't short it either. You can't short into support. But today's close is definitely going to matter. And for anybody that's wondering, that was not a beer. It is a V8. I drink one every morning. I get my vegetables in. I drink it because I like the flavor. I know it's weird. A lot of people hate it. And URO, or USDJPY is absolutely going right back up again. So it looks like the market does not believe the BOJ. Does not believe the BOJ. They think they're full of crap. And there you go. There's the Japanese yen futures, and they're getting absolutely smashed today. Not looking so good. What is this? News. Oh, contract switch. Never mind. Is there news on it, though? I don't see any news. I don't know why it's getting killed today, but it is getting killed. All right. Can we look at AAP? Yeah. Advanced Auto Parts. Let me just pull it up this way. It's starting to look better. I told you it would eventually. That's a big gap to fill. 109. Yeah, I mean, for the people that were able to withstand the hold, because I said back over in here, this is a good price to buy it because it's off so much, and these stores make money. I mean, O'Reilly Auto Parts is trading at all-time high, and so is Napa, right? Those are your two other massive conglomerate car auto parts stores in the country, and they are absolutely doing great. Advanced Auto Parts, there is literally 3 of them on US 1 alone, right? In my town. 3 of them on the same damn street. So, I mean, they're spaced out, but they will get their stuff together. The board will fire whoever caused this, and they will fix it. They will bring somebody in there that can fix it. So getting Advanced Auto for, under $70 was a good deal in my opinion. This was just poor management, more than likely. I mean, I don't know the full story, but I'm sure if you just Googled like what happened to Advanced Auto Parts, I'm sure you're going to find a ton of articles that you could read that will tell you exactly why the stock sold off so hard, right? My opinion is it was probably management. And they got rid of those guys, and they're going to put people in there that can get the job done. I still think this thing has got plenty of room to go to the upside longer term. For me, this would just be a buy and hold, zero leverage. At 83.50, it's still a good deal. But you can see that you're massively overbought on the daily and getting the overbought on the weekly. So, I mean, is it a buy today? No. But, the next pullback, next decent pullback you get, it's definitely something that I would look for it into buying. I mean, it's almost a perfect inverse head and shoulders. And you have broken out above the neckline. Neckline being 74.40. You don't get much better than that, right? As far as head and shoulders go. I mean, it's almost standard. There is your standard issued head and shoulders. Yeah, I think it's going to go higher over time. I just do. But I would look for it to pull back to around $72, and then I'd buy it. I think $70, $72 is a fair price for it. And I would just hold it for a very long time. I'm talking years to years and years and years. But eventually, it'll go back up. I'm not expecting a bear market, but as long as we don't get some tremendous, nasty shock, this thing is going to go higher. So just hang on to it. Yeah, be patient on the NPH. For me, that is, it's a sell. It's just a sell. Unfortunately, that thing is, they don't make money for one. You know what I mean? And that makes it very difficult to buy a company that is literally broke. Oh, they do make money. Never mind. I take that back. They were broke. They're making money now, so it might be a buy, Michelle. I mean, with their AI or whatever that does, analysis, they're saying that this could be an area to be a buyer. So maybe I am completely wrong about this one. That is a wedging formation. That is typically a bullish formation there. Just, you know what you're doing, right? You're in the Discord. I see you taking FX trades all the time. You know how to trade. So you know what to do. Wait for it to find support. Look at that support. Hit it up, right? Just don't risk more than 1% on it. You can make it as wide as you want, the stop loss. Just make sure it's only 1% of your total account's equity if you're trading it. If you want to buy it just to buy it and hold it, yeah, maybe they can get their stuff together and longer run, see a nice move higher. But definitely got a wedging formation there, and I never even seen it. So FinViz is a pretty good site. It's free. It's just got a ton of pop-up. Look at this. Tasty Trade, Tasty Trade, Tasty Trade, Tasty Trade, Tasty Trade. And I got Tasty Trade literally open right now. What are you doing? Like, why are you advertising to me something I already have and already use? Can I look at Sushi Swap? Yeah. Sushi. All right. Sushi looks pretty good. It's breaking down below the 50. I don't necessarily like that, but it is on the daily. You tested daily support to perfection there. One spot for 999. Boom. And you're bouncing. So this is the price that I would watch. I don't want to see a daily close under one spot for 999. It's just 150. Let's just call it 150. It's so damn close. We'll call it 150. If you see a close under 150, then you're going probably down to 126. All right. If 150 holds, it could potentially be an area for it to bounce. It looks okay. Let's put some moving averages on it and see what it looks like that way. Yeah, it looks nice and bullish there on the daily and on the weekly. not so bullish, but it's not terrible. I mean, it is pretty bad, but you hit massively overbought on the weekly. Anytime you do that, you just have to expect that it's going to pull back, right? Eventually. It is not going to keep going up and up and up and up and up and up on the weekly time frame. Once it gets to this area, people will start to sell. It's just nature. It's almost a guarantee. And that's why I've been screaming at the top of my lungs for a while for people to chill on Bitcoin. Obviously, I didn't think it was going to go to all-time highs. This thing has been overbought on the weekly forever. Since October, this thing has been overbought on the weekly. There was a brief period here where you got back under overbought, and you went right back up to almost 90. That's insanely overbought. And the halving hasn't even happened yet. So, I mean, chill. Daddy, chill. You're going to get another chance to buy this thing cheaper. In my opinion. I just don't know where. I mean, you just have to ask yourself that. I know some people are saying you won't ever see any Bitcoin under 50,000 again, but I got news for you. Don't. I mean, it can definitely do that. Absolutely, it can get back under 50 grand. You're only $13,000 away from it. So let it find support. I mean, a pullback into the weekly 21 exponential is almost a given at this point. And that's all the way down to 49,000. So once it gets so far stretched out above this, it's got to come back. At some point, it will retest the mean. That's where I'd probably be looking to be a buyer. S&P's done went and turned bullish on me today. Bastard. At support nonetheless. That's okay. That's okay. Damn. Like, what happened? Did I miss some news today? Surely not. I mean, not with tomorrow being the Fed. Go to my charts. Yeah, it's just pulled back. Went right back up. But I don't know. I don't like it. Not with Bitcoin. Oh, JPY had news. That's why. BOJ press conference. I wonder what they said. I'm going to have to look this up and see what they said. That's why the Japanese yen's getting crushed today because of the BOJ conference. I guarantee it. Let's go. Building permits, housing starts. We didn't have any 3-star news events today. None. 0. Boom, 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 boom. All of them 2-star. So, I don't know. I'd say this is probably just a fake out move. If you did sell that call, remember 1%. Once you get to that point where you're losing 1%, you bounce. You can always jump back into it. But I am down on that trade by $18. I thought gold was going to hold, but for some reason, AU's getting absolutely slaughtered. That thing was up so much and it's just getting killed. If they close below this, I'm closing that trade out today. Gold has not pulled back that deeply, but this has. Like, this was going straight up and now it's straight down. So if we lose this today on a close, I will be closing that trade out. I will not take a loss on it. And I bought it on this day here. So we're getting pretty close to my entry. Hopefully it holds right there. If it don't, we close them down. And that's literally the only winner that I got open, unfortunately. The rest of them are getting killed. The small account's getting killed. I got it back up to profitability like 2 days or uh, last week. And then it took a couple more trades, and now it's right back in the red. It's down by 4% again. So I definitely got to get some wins going here. Mainly the reason is obviously I struggle to put on good positions with it because the margin is small and I can't day trade with it and this and that. My options are limited as to what I can and cannot do. Like, I would have been selling puts on Nvidia the whole way up. You know what I mean? Like, that's just a simple trade. I'd still probably be selling puts on Nvidia. But if it, with Bitcoin pulling back, I'm very curious. But it's at support, so we have to keep that in mind. All right. Shusi, we checked it out. Plan was to buy and just hold. So thanks. Awesome. And Adrian says, what do you think about Shibu? I bought some because I think percent gain will be greater for me than Bitcoin. All right. So SHIB is like, yeah, I mean, if it was to get bullish, it could ultimately be a bigger gain than Bitcoin. Percentage wise, I mean, it did, look at it, it did moon already. I haven't looked at Shiba Inu in so freaking long. There it is. I mean, if you bought down here, good. If you bought up here, not so good. Because Bitcoin's coming down. It's up 160% from this old swing high. So, I mean, it is doing pretty good, but I mean, if you go back, I mean, this just happened too since this year. So, on a year to date basis, this is definitely up more than Bitcoin. So, you are correct there. But just please keep in mind that these things can come off just as hard as they go up. Yeah. So just remember that they can come down just as fast and as hard as they go up. But it looks like a lot of people bought into SHIB. I haven't checked Doge either. What's it look like? Probably the same. Yeah. SHIB and Doge trade pretty much about the same. I mean, a lot of cryptos are flying or were flying. I'd say that's probably coming to a quick and abrupt halt soon. Adam still hasn't done anything though. I mean, they're all red. AVAX, AXS, they're all pulling back. But that's because Bitcoin is. Yeah, I mean, most of these charts look almost identical. Big moves up. I just looked at Doge. There's Dot. Well, Phantom is not pulling back. To be fair, it's up 10% today. That's a short squeeze, but eventually it's going to come down. Kusama, what are you doing? Getting wrecked. Link's pulling back a little bit. Yeah, just whatever Bitcoin's doing, these things are usually doing the same. I basically spend most of my time trading Bitcoin and stocks and not Forex. Forex has been difficult lately because it's been making its moves during the London session, but there is money to be made in the crypto markets if you nail one of these things on the lows. But unfortunately, most of them are not on the lows, are they? They're up pretty substantial year to date. Theta's up a couple 100%. Uni's up. Yeah, a lot of these things are going to do exactly what Bitcoin's doing. Stellar's not doing so good though. I mean, it got a nice pop here and then it held it and another little pop, but it's almost sold back all of that rally. XTZ. I used to trade this thing when it was less than 50 cents. Yeah. It wasn't less than 50 cents for long though, was it? Cardano. I mean, obviously I missed a lot, but I used to have more on this list. I don't know what happened to them. And that's not even a crypto. Yeah. Yeah, just be careful. I mean, a lot of things are pulling back. No, I haven't looked at AMD, but I did notice that it was getting murdered today. Yeah, it's down 6%. That just leads me to believe that Nvidia is next. I mean, it's just a matter of time. Tomorrow is going to be hugely important. Nvidia bouncing off of support right now. But it's making lower highs. Now, this is the definition of a bull flag, but at the same time, it's been bull flagging for so long. Usually when you get up in the 950s and the 970s, it's almost a given that you're going to 1,000, but it just did not quite get there. And with that, we will like I said, tomorrow, if we have the juice, we'll go live during the stream, during Powell's comments. And if we don't have the juice,